Hey, are you a Gen Zer or a millennial and you're ready to buy that first home, but you just don't know where to start and you got a lot of questions? We're here to help you with that today. I'm Adam Black, your lender for your life. And I got a special guest here today, my daughter, Anna Morgan. She's a Gen Zer. I think that's 27 down to around 18 or 19 years old. She just graduated college. And I asked her to send out a message to some of her friends and just see what interests you guys. What are your concerns about buying a home? What are your questions? What do you believe is the biggest misconception about buying a home? So, I asked her to come on today and read me some of these, and she didn't edit them, and they're pretty good. So thanks for being here. I really appreciate that. And let's do about 4 or 5 of them. Hit me.
All right. Okay, so you and Mom told me I have to have 20% of the sales price saved up to buy a new house.
Okay.
How true is this?
Yeah, for the record, that's what the person put. I did not tell her that. This is someone else said this.
Yes.
So that's a big misconception in the business. You do not have to have 20%. As a matter of fact, there are a couple of programs where you don't have to have anything out of pocket. You can do zero down. USDA is one of those. VA is one of those. In most cases, though, you're going to need 3 to 3.5% of the purchase price. Now, that can come from a lot of different sources. That could be money that you save. That can be a gift from parents. That can be down payment assistance funds. There are a lot of good grants out there to help you buy a home in different areas. But yeah, anywhere, I would say on average, 3 to 3.5% is what you're going to need of the purchase price as a down payment. Now, of course, then there are also closing costs and prepaid items. We'll get into that later. We can negotiate that kind of stuff. But yeah, that you do not have to have 20% anymore to buy a home.
All right. So in regards to home insurance, I know it protects the cost if anything happens to your house, but there are different ones to choose from, I assume. How do I know what to choose, and did the plans increase or decrease the value of your home or make the buying process any different?
Great question.
Kind of a long one.
So yeah, it's kind of a long one. But so homeowners insurance or hazard insurance, you'll see it different ways, different places, different people calling it different things. That is to protect the home if there's fire, if there's flood, if a hot water heater breaks and it floods the house, or anything catastrophic that could happen to the home. How you're going to choose that is it's a lot of different parameters, but mainly you want to be able to cover the replacement cost of that home. Now, every lender is going to have their own parameters that insurance has to fit into. However, it's your choice who you use, okay? That is one of those situations where doing this 20 years, I have found personally, I like a local person. And the reason I say that is I want to be able to text or call that person if something happens. And I'll give you a great example. The other day, your mom and I were headed on vacation, and she had bought a new vehicle 3 weeks earlier, and all of a sudden she looked at me and said, I forgot to get insurance on this car. So I literally just text my insurance guy and he set it up for us. So that's why I like a local person. I don't like the online stuff. I don't want to press one when my ceiling's falling in from a flooding hot water heater. So so insurance is to protect you and the house, and you can use whoever you want, and it doesn't impact the value or anything. And as far as is it a big process? It's not. It's super simple. Normally, when we go under contract with our clients, we send them an email that gives them 5 names that they can call if they don't already have someone. I always suggest that people call whoever they have their car insurance with and check with first, just because you're already with them. And then from there, you just kind of call around and find the best deal.
How do I know if I qualify for a down payment assistant loan?
Great question, and that varies a lot. So down payment assistance, let's talk about that. That is a situation where an entity, it could be a government entity, it could be a private entity, where they are giving you a portion or all of your down payment that's needed to buy a home. Everybody's different. Every state is different. Every area is different. I've even seen those go down as far as like just a small geographical area within a city that there's special grants available. So how do you know if you're going to qualify? Get with a good lender that knows their stuff and can walk you through the process and see everything you can qualify for. And what I mean by that is, for example, here in Mississippi, we have one that's called the HAT, and it's teachers that teach in underserved areas. They get, I believe it's about $6,000, but then you can couple it with the other Mississippi down payment programs. So you can get up to around $16,000 using 2 of those. So being able to stack them and having a loan officer that knows how to do that can be very beneficial to you.
So essentially, if I do qualify, will I be taking out 2 loans?
It depends. Great question. So it depends on what the repayment is. Some of those are, yes, some of them are going to sit in what's called a second lien holder position. You've got your primary mortgage, and then you've got that second sitting over here. Some of them you have to repay a small amount a month. Like there's one here in Mississippi called the Trustee 10, and I think the payment's on it about $62 a month, but you get $10,000. And then we have another one called an Easy 8 that's $8,000. There's no payment required. And if you stay in the house 10 years, they fully forgive it. So you don't have to pay back anything. So it all depends on the program. It all depends on the area. Again, get with a great loan officer that can walk you through it.
How long does it take to pay off a mortgage?
The rest of your life. No. It depends on the individual. Most mortgages are going to be a 30-year mortgage. Now, that sounds like a long time to a 24-year-old. I get it. It seems like a long time to a 52-year-old. But here's the thing that you need to think about is that's a 30-year mortgage. That doesn't mean it's going to take you 30 years to pay it off. And what I mean by that is you're going to look for opportunities to make extra payments. You're going to look for opportunities to refinance to lower interest rates and shorter terms, which you can do a 15, a 20, a 25, or a 30-year mortgage. So a lot of my clients that I closed in November of 23 on 30-year mortgages, they're already refinancing to 20-year mortgages because rates have dropped. They can drop 10 years off their mortgage and keep the same payment. So as a mortgage professional, I'm always looking for ways to get you out of debt quicker. Everybody thinks that I want you to be in debt, but actually I don't. So, I want to get you out of debt as quick as I can. I want you to have financial freedom. And that's what we do on a daily basis.
All right, last one for today. How the hell is anyone supposed to be able to afford a house my age in this market?
And by the way, that is not what he actually said. But it was a little bit
filtering it a little bit.
Yeah, she's filtering it a little bit. Great question. And, housing affordability is at an all-time high. That is just it's a national pandemic, if you want to. And it's something that our industry is fighting every day and trying to look for ways. The cost of materials are higher. The cost of land is going up because they don't make land anymore. Interest rates are up. So it's daunting. It is. But it's possible, especially when you look at rent is increasing faster than interest rates are on mortgages. So you're better off to have a mortgage. You got to have one or the other. So you may as well have a mortgage and build equity and build wealth over time. So to answer the question, it's like we talked about earlier, it's getting a good budget in place. It's enjoying life but not being frivolous. It's looking at it as a way to build wealth, and it's getting with a professional that can walk you through it and make sure that you're staying in an affordable situation. I always have people ask me, how much can I be approved for? Well, how much I can approve you for and how much you need to spend are two different things. I never want somebody to max out on what they can be approved for. I want them to live within a means, and that's all about budgeting and saving. Hey guys, thanks so much. I really appreciate it. Appreciate you stopping by. I'd love your comments below. We want to continue to do these because I think it's important. They don't teach this in college. They don't teach this in high school. And I just really have a passion for helping people understand this process. So make sure you comment below, DM me. I'm on all the socials. You can reach out to me on all of them except for Snapchat.
Maybe that's coming next week.
That's doubtful. But yeah, reach out to me, Adam Black Mortgage. You can search for me anywhere. You can comment below. Make sure while you're here, please, to like, subscribe to the channel, hit that little bell so you're notified when we drop new content. And as always, thank you so much for stopping by.